Yo, yo, what's going on, everybody? So today's analysis is a no BS, all technicals, all metrics related insight on the market. So if you're not interested in watching this video because you think it's too technicals heavy, I'm discussing too many metrics, how to go about valuations, probably want to skip to a different video. But if you want to learn about technicals, about potential trading opportunities, how we look at the market from a technical basis, different indicators we use, stay tuned. All right, let's get started. So we're going to start off with the big dog BTC here. On BTC, I think the most evident thing is that we are stuck in a pretty wide range, going sideways since basically the beginning of March, right? Beginning of March, we've tagged the 72, 73K area multiple times and then unable to break it. And then we've tagged the support range down here, the bottom of the support range, which is around 61,000, and we're unable to break that. Even as we talk about price action, we're currently sitting at that exact range low. So what does this mean going into the coming weeks ahead, right? So first, we're going to discuss different time frames. So let's start off, with the 15-minute time frame, right? On a 15-minute time frame, I like to use very simple indicators to gauge momentum changing in the market, like on a small time frame basis, with the 20 and the 40 EMAs. Okay, EMAs are exponential moving averages. Exponential, why? Because it is able to catch a, uh, a chart and an asset that is more volatile. That is what exponential effectively means is, it is able to understand how to pick up the nuances of how fast the price action moves in a highly volatile asset. Simple moving averages, or MAs, as you've seen before, will look slightly differently. They're close, but they're not exactly the way the EMAs look. So I prefer to look at the exponential moving averages on multiple time frames, especially in crypto. I also look at the MAs, but more often than not, especially when I'm focusing down into the 15-minute, 1 hour, all the way up to the 4 hours, I find these 20 and 40 EMAs extremely useful. So as of right now, you could see when the higher moving average, which is the 40, the green, crosses above the 20, which is a smaller one, the yellow, more often than not, you've entered a downtrend, right? So we've entered effectively a downtrend, at least on a local time frame basis, since right here, right? As you can see, once we crossed and price action bled below that, both these moving averages, which is around Tuesday, right? So 2 days back, we've been unable to cross that, and we've been unable to turn these MAs. Okay. On a 1 hour time frame, same thing. Around Tuesday, we had the bear cross of the 20 and 40 EMAs, unable to cross it since then. On a 4 hour time frame, we've effectively had multiple crosses, all of which have been giving us signals that the market in itself is probably quite bearish, because bearish, at least near term, right? Because what we have here is, since on the 4 hour time frame, since right here, even right here actually, where we had price action at $41,000, when the 20 and 40 EMAs on the 4 hour time frame had crossed bullishly, meaning the yellow, which is a smaller moving average, as you can see right there, and the 20 and the 40, which is the longer moving average, which is the green, have crossed bullishly, price action has been continuously up. And once we broke that 4 hour time frame, bear cross, and we turned bearish, as you can see, it's been very choppy, right? We go bullish, bearish, bear crosses, bull crosses right here. You can see, price action switches a little bit and then switches back a little bit. This is exactly what happens in a downtrend that is just beginning. or it is extremely choppy, right? You'll get a whole lot of bull crosses and bear crosses on the 20 and 40. Now let's zoom out and go to the daily. You can see on the daily too, we've now had the bear cross on the daily, which is a 40 above the 20. On a daily basis, that's not a good thing, right? That means that near term, we're probably due for a further pullback. The last time we had a bear cross, okay, was right here, right? And obviously, the price had begun to already pull back prior to the bear cross, but then quickly price reclaimed that, and we bull crossed, and then we took off, right? Will that happen here again? It's possible. But the other time before that, before this time where we had a bear cross, was right here, where we went sideways for about a good month or so, right? Mid-June all the way to about mid-August. So actually that's 2 months of sideways movement. And then we broke down, based for about a good month or two, and then we took off. Right. So what does that tell us? Well, from an exponential moving average perspective, right now, price action is not looking good. It's probably, near-term bearish. However, I do think that we also have the potential of price action from here squeezing a little bit, because the last 4 days, price has been bleeding down like this, right? I would figure a bunch of shorts have gotten piled in here, and they're ripe for exploitation to the upside. More often than not, when it comes to charts, right, what I look for is, where is positioning one-sided, where is bias one-sided, and who can be exploited. Now, when the chart has strong momentum, it's very hard to do that. Like, meaning if the chart is continuously doing this and this and this, it doesn't matter how many shorts pile in here or here, price is not just going to spike up like this, right? It's very rare. But when price is going sideways like this, right, and it's not able to break this low, and people are piling in and shorting the low right here, okay, it's possible that price is going to spike, blow out a bunch of shorts, and then later, then we bleed out, and then we break down, okay? Again, that's not necessary. I'm just thinking out loud, like what could happen? What is the area that could be exploited? What is the positioning that could be exploited? And with that being said, if you look at my alpha friends here, I spoke about this potential move, right? So I'll show you guys this chart also, which is a clean descending channel that I believe BTC is, probably going to try to squeeze up into this like 66, 67 area. And, that gives me a potential trade opportunity, which is maybe I'll just long this thing. Maybe I'll keep my stop under here or a deeper stop under here. And I'll trade it back into this high, which is around 65. Maybe we squeeze a little bit higher, maybe take out these highs up here around 66, 67, and then maybe we break down further into end of May, right? The other thing I've spoken about is, I believe that the market is probably due for a much deeper pullback towards 50K, right? And I believe in that because of the fact that I don't think many people are prepared for a grinding, another few weeks, right? Also, being in the crypto market for several years now, almost 8 years now, I'll tell you one thing about BTC. Bitcoin, especially when it's coming off, let's just say local highs like this, right? When it's doing some shakeouts and pullbacks, they're rarely choppy, and then choppy and then up, right? Rarely. More often than not, they kind of end with a pretty sharp bang, meaning like boom, like that, and then like that, and then some kind of base period, and then we do something like that. Okay, so in my opinion, I think we're due for maybe one more shakeout. What are the other indicators pointing to us? So the other indicators that we have in our arsenal are things like, for example, pivots, right? Pivots are very important. Pivots are nothing but horizontal SR price action. Okay. They come on a daily basis, meaning these change on a daily chart, these change every month. On anywhere up to 4-hour to 12-hour charts, these change every week. And on a 15-minute chart, they change every day. All of these timeframes are important for pivots, depending on which time frame you're actually trading, right? If you're trading intraday, probably want to stick with 15-minute or hourly time frame or 4-hour. If you're trading multi-swings, multi-week swings, you probably want to stick with the daily chart or possibly like an actual weekly chart, right? But I don't believe the weekly chart is going to be helpful for you as a trader. As an investor, waiting for deep pullbacks or shift in like multi-month direction, I think the weekly is helpful. But right now, like, the pivot on a weekly basis, which is this pivot changes every year on a weekly chart, right? That doesn't help you. Like, this is at 35K. Unless something cataclysmic happens, like, we're not really getting to 35K anytime soon, right? Maybe you could make the argument that, oh, well, we've already topped the market and we're going to do this kind of shit for like a year. If that's your argument, I mean, that's a very stretched argument. Like, I don't know if I buy that yet, but if we do this like long enough for another 3 or 4 months, then I would buy that. Right. But I think we're still in the early innings of a a bull market. And I think we can, possibly push up from here. Right. I think we could push up as in at least near term. I think we have the potential to have a mini squeeze and then, total bleed out for the next like few weeks. Okay. Let me go to a different cleaner chart and show you that on a different like optics perspective. This is kind of how I see it. In the last block where we found a significant chunk of buyers that really elevated price was here, right around the 50K mark. I think it's entirely possible that price makes its way back here around the 50K mark, builds a base somewhere here, and then takes off, July, August, etc. I would make the same argument with, altcoins too. I think altcoins, maybe they're due for a pop. Full disclosure and not financial advice, I am long, spot long on near. And that's because I already spoke about this earlier, but let me see where I posted about this. I spoke about this kind of here a little bit. Like, I mentioned that, hey, I think we're due for an alt season because Bitcoin dominance is toppy. I think we're going to bleed out on the dominance, meaning that capital and money is going to rotate into altcoins. I had a larger update on this kind of stuff. I forgot where I put it. Let me see here. Maybe it's over here. Oh yeah, these are like all the things that I spoke about, which are positively like more bullish, right? Which is that we have ETH ETF coming. Larry Fink has opened up the BlackRock ETH fund. I think L3s themselves are going to create a new narrative. And then more so, I spoke about this on my Twitter. Let me see here if I can find it. I may have spoken about this recently. There we go, right? May 6th, so about 3 days ago, I mentioned that, hey, listen, you have NVIDIA earnings coming up in about 2 weeks or so, right? May 22nd, Ethereum ETF coming up on May 23rd. You also have like CPI data, which is, if you go to the economic calendar here, that's May 19th, if I'm not mistaken. Sorry, May 15th, right? So May 15th, you have the CPI inflation data coming out, right? All these things are coming out middle of the month, end of the month. And by that time, all right, by that time, I think price can do a lot of things. Price can squeeze up and then squeeze back down, right? many things can happen to price because that's a long period of time. In 1 or 2 weeks in crypto is like a quarter in equity markets, in traditional markets, right? So I don't buy that, oh, well, CPI is coming next Wednesday, and Nvidia earnings are coming out May 22nd, and ETH ETF is coming out May 23rd. So crypto has to nuke today. Like that, I don't buy, right? That's not really fair because there's too much time that can elapse, too much positioning that can be built up. Like these shorts, they're going to get absolutely blown the F up, right? By the time those events even come, like CPI data, um, Nvidia earnings, those shorts could get their faces blown off, and prices already trading up here, and then it builds a top like a BART, and then boom, right? By that time. So what I say is this. I believe the market is ripe for exploitation to the upside. I believe that BTC and possibly Near are the leading candidates of that, exploitation to the upside, just because they have pretty strong tailwinds as well as the chart looks good. Let's keep it as simple as that, right? The chart looks good. I would say the momentum indicators like the stochastic RSI. If you're not familiar with the stochastic RSI, it's just a faster period of the traditional RSI. I also have the Shepherd indicator, which is the mix between a traditional RSI and a stochastic RSI with fibs laid inside. This is an indicator my partner and I built. It's not available for the general public, but I show it for free on my YouTube videos just because it's a pretty handy and useful indicator that we've found in the past. And we've back tested the data like, years. Okay. So in this Shepherd indicator that we've created, same thing, right? I think Near has a potential exploitation on a daily chart in terms of momentum to the upside, meaning price can actually gravitate up a little bit higher, possibly to $8, maybe $9. And that could be also on the back of this NVIDIA AI stuff. If you're not familiar with why Near will benefit off the AI trend, you need to listen to some podcasts and get, deep in the weeds of what's happening in the crypto ecosystem as well as Near. Simply put, Near is trying to become the AI chain. Whether it is going to happen or not doesn't matter, right? The market will see it as such, and they'll see NVIDIA as an AI event and Near as the AI ecosystem crypto to bet on. That's it. So in that time span, Near could go to $9, maybe 10, maybe all the way up here to this trend line support that broke around 15. That's my general bet. Again, full disclosure, my average positioning for Near is like $6.75 or $6.85. Not that it's too far off from where price is, but I do have a slight head start on price action, right? Just a few days back, Near was trading at $6. So in fact, you could have got a better positioning because I was long on Near from here. I averaged down a little bit down here, but point is you had a pretty good deal coming out, over here. I'm sorry, I was long for Near from here. My bad. So from here, price pulled back even deeper. I held on. I, in fact, added a little bit. And then here, price is doing relatively decent, right? And again, momentum indicators also tell me that whether it's the MACD, which is, again, moving average crosses, or RSI, which is momentum indicators, or stochastic RSI, momentum indicators, they're telling me like, it looks decent. Like, it may have one more leg in it. Same thing with BTC, whether you look at it on a 4-hour basis. I think stochastic RSI is bled out on a 4-hour basis, meaning I call this, your double bottom on momentum. But guess what? Price is actually bled out much further in this double bottom. So what do we say here? We would call this like a bullish divergence. Usually I don't really use divergences on stochastic RSIs because they're not that reliable, let's just say, right? Because the stochastic moves so fast. That's really why. But on a Shepherd indicator basis, which is, my traditional RSI, I think momentum has bled out a little bit more. And usually what happens is like, see this, aqua teal colored line, like this blue line. Usually when it's stretched so far out of this little channel, what happens is price will pull back like this and momentum indicators will pull back like that, meaning price might squeeze, this thing might squeeze up, and then you have maybe one more drop, right? As long as this thing doesn't shoot up like this, and then it bases like these turn around and they do that, then I would say, hey guys, momentum is shifting. It looks like the momentum has clearly gone from, on a 4-hour basis, it's gone from, this downtrend to a potential uptrend that might be building. But that's not the case, right? I still continue to believe that we might be in this phase right here, as I've spoken about. This squeeze, pop, bait people, blow out shorts, then bleed out. All right. So I've shown y'all on multiple time frames, like exactly, from an indicator perspective, from a horizontal SR perspective, why I believe that the market could exploit positioning to the upside. We can also look at actual positioning, right? So if you go to Coinalyze, you'll see, for example, I don't know if open interest will actually give us a solid idea of, how many shorts have come about. This is not bad, I would say, right? Like this doesn't really tell me that, oh, there's a ton of shorts piling on. Like usually I would be paranoid if price was bleeding out like this and then open interest was like slightly like this. I would probably say, yeah, that's probably shorts piling in, right? Because more often than not, like the way to view open interest, which is just, levered position, non-spot contracts, right? Or sorry, non-spot positions, but more levered contracts, is that, when price starts to go one way, right, the people will start piling in and saying, oh, well, this momentum has to continue, right? Like near term, that's kind of what happens. And what people generally don't see is, well, that could just be wrong, meaning price could be bleeding out. But near term, your shorts who are piling in might get blown out and then price bleeds out further, right? But I don't see that happening a whole lot, which, doesn't necessarily mean like you still can't get a squeeze, but maybe the squeeze may not be as big. Like, if you were to tell me that, hey, open interest is up drastically and price is actually bleeding, I'd say, oh yeah, we're due for a big squeeze. Like it would be like that. And then the open interest would unwind because that's just shorts closing, right? They're getting liquidated or whatever. Then we may do something like that. Okay. Not really happening right now, but I do think that, we may pop a little bit, whether we go to 63, 65, 67, that remains to be seen, Okay, so we have that. Let me see here. If you're into the macro related stuff, like for example, why is gold popping? Well, I think gold is telling us a story that there might be external risk in the market. There might be inflationary risk, war-related risk. Usually commodities like gold do not just, have giga moves like this. For gold, this is like a 10, $15 trillion asset, right? Gold is up in the last, 2 months. It's up 10%. That's like a whole Bitcoin's worth of market cap that it added. That's not very common for gold, right? So yes, you should be a little bit, paranoid, or at minimum, you should be careful of like what's happening in the gold market. 10-year treasury yields, well, they're approaching 4.5%, which is, their local highs. Also, maybe not really good, right? Usually when yields are up like this, the market is sensing some form of, I don't know, like a de-risking. I wouldn't say fear or panic. It's just de-risking. Like that's it. Now, de-risking in equity markets. So this is the ES contract. These are S&P 500 E-mini futures. SPX is now open. So let's go to the S&P 500 chart. Again, I told you guys at the beginning of this video that, if you're not into technicals and deeply looking at markets from not only technical basis, indicator, momentum, valuation, etc., this video may not be for you. But if you want to learn something today, right, this is the video for you. So stick around, all right? So what do we have in positioning in S&P 500? We have a top created, which is, 2 or so weeks of sideways, a pretty sharp sell-off, coming back pretty close to the same level that we broke down from. Now the question is, do we break down again, or do we take out this high right here? That remains to be seen. I'm not going to, state either way what's going to happen, but let's assume, right? Let's assume for now that price is going to have maybe one more pullback on S&P 500. Okay, that would make sense because from a pure, if you're into Elliott waves and stuff, right? Like from a pure corrective wave perspective, this is your A wave, right? So let me go back. Where's the Elliott? There we go, right? So yeah, right? That's your ABC correction, right? If you're familiar with ABC corrections, they generally happen in the midst of a larger, impulsive count, meaning we may be in like, I don't know, 1, 2, the 3 we are probably in the midst of, or let's just say, the 3 is right here, 4 is right here, maybe the 5 is right here, right? Somewhere like this. Generally in Elliott waves, the 3 wave cannot be the shortest. It can be in the middle, meaning the 1 wave was big, 2 wave was a decent corrective pullback. The 3 is right here. The 4 is going to be sharp and steep. Maybe it goes a little bit right there. And the 5 may be, like not as big. It could just have, a pitter patter of a move, meaning the previous high of the 3rd wave was like 5,200, and maybe the 5th wave goes to only like 56 or 5,700, right? Meaning the 5th is really not that impulsive, but, it gives us that final 5 wave count. We also get this C wave, ABC wave corrective count in the 4th, and that's it, right? By September or October, November this year, we're done with this big impulsive wave. And then maybe we're due for, a larger correction into 2025, right? Maybe. Again, I'm just trying to strike the chord with both the bulls and the bears to give you guys like an insight that, yeah, it's possible we're in a corrective wave of wave 4, but then we probably have one more leg up, right? One more leg up because I think the market is still bullish. This is still an election year. S&P 500 is still looking pretty damn strong. So I don't really think that we are due for any, serious bear market sell-offs right away. It's possible, but I don't really see it as such yet. Okay. If you want to look at, let's just say things like oil, right? CL, there's your oil contracts right there. Why is this doing that? There we go. Okay, oil trades at about $80, 79. That's not bad, whether it's oil going down like this effectively means that, people could say, global growth is slowing down. Oil spiking up could be like, there's maybe some wars and concerns and conflict ahead, right? So no matter where oil goes, people will always have an excuse for it. I don't really care much for oil, I'll be honest. I don't think it's been like that much of a signal for most people in the market, as much as like yields have, or the DXY, for example, right? We talk about the DXY often, and the DXY is probably one of the more important signals because of the fact that it's a very, very important indicator of how currencies moving up and down could impact US equity markets. could impact foreign markets, could impact interest rate hikes or reductions, or some countries' bank blowing up, right? Sovereign wealth funds blowing up, or you've seen maybe in the news that USD JPY has been kind of on a tear. Why is this important to us? It's important because when the dollar is getting continuously stronger against the yen is getting weaker, meaning the importability of their own currency is getting weaker, right? That's important because that means the people in their country might be suffering through a form of inflation, or rather inflation is on the horizon and the country is doing its best to avoid that impact on its citizens. So then what happens? Well, then you have stuff like swap lines, US dollar, JPY, right? You'll see that a couple days back, I'm pretty sure it just happened, so give me 1 second. Okay. And I'm going to explain to you why this is important. All right. I'm pretty sure it happened. There we go, right? US Japan reportedly agree on an FX intervention. Right? What did I say? Because they cannot afford their currency just continuously getting devaluated against the dollar. Just not possible. Why do we care about Japan? Because Japan owns a shit ton of US treasuries. You can't have one of the largest debt holders of America, which is Japan, panic about their own currency, because what will they do to stabilize their currency? They will sell US treasuries, right? US treasuries, again, would blow out yields. Yield spreads, yields themselves would get blown out, which would then create a macro panic. America cannot have a macro panic right now. It ain't going to happen. It's an election year. Jay Powell is, pretty resolute in holding low interest rates, stabilizing the economy, stabilizing credit markets. Same thing with Biden. They can't have this shit in an election year. So what will they do? They will bury this stuff with as much money as whatever Japan needs to assuage the impact of dollar yen blowouts, meaning they will continue to ensure that Japan's internal currency, the yen, doesn't see further depreciation against the US dollar. And I would figure that this thing starts, bleeding out slowly, right? Over the next few months, and maybe by the end of this year, then it might pop again. But for now, it ain't happening. There's probably not going to be any big news coming out of here. It will get quickly squashed because America doesn't want that, issue, and Japan definitely doesn't want that issue right now either. All right. So how does that impact crypto markets? I think crypto markets will generally tend to deal with all macro related events as just noise, right? Generally, BTC and most crypto markets are what we call high beta or risk on assets, meaning as long as the macro is good, as long as equities are doing decent, as long as the currencies, gold markets, US Treasury yields, as long as those are not shitting the bed and there's no serious issue in the macro, crypto and BTC will be just fine, right? Any sell-offs will probably be near term. They'll be bought up because this is a crypto bull market that we're in. And by the way, I continue to believe in that, right? I don't, like, even in this big thread I wrote, if you kind of look at the bottom, I said that, I might be talking about like a pullback to 45 to 52K area for BTC. I still believe in it. I spoke about it right here, right? Beginning of April, I told you we're probably going to get a pullback somewhere around, like low 50s, high 40s. And then after that, we're going to base out July all the way up until July. And then I think the end of the year, it's going to be a damn big blowout, right? With that being said, I still continue to believe in that. But again, I think this summer and most of the year is still going to be very bullish. Okay. All right. So we've discussed a lot of technicals, a lot of macro related stuff. Again, I keep this kind of information in my back pocket just because I don't think a lot of people are interested in what happens behind the curtains of how markets operate, just because it goes above their head. Most people don't really want to learn that, but I think it's important from time to time, especially once every month or two, to discuss why markets move the way they do. How do we focus on technicals? What is the momentum of the market? What are the indicators showing us? All the things considered. But you don't need to look at that every day, right? It's not really helpful every day, I'll be honest. It's helpful like maybe once or twice a quarter. That's it. So, yeah, we'll pay attention to all the other stuff. And then aside from that, I've told y'all, Degen, crypto, I still believe that we're probably trended upwards. Sure, we're going to have, deeper pullbacks towards 0.015, 0.013, something down here. But I think overall, end of year, like maybe even summertime, we may start pushing up. Degen trades at $200 million. I see no reason why it can't trade at 2 billion. But I will say this, I have a lot of qualms about Degen, right? I am pretty vocal in how I talk about things. Like I'm not just a perpetual bull, right? I speak about the fact that, for example, there is a serious concern that you have a lot of Degen holders, but there's not really a whole lot of activity happening on the Degen chain, right? The Degen bridge itself, I think, has bridged over maybe 30,000 users. There's not really a whole lot going on in Degen. I can tell you that honestly from a user perspective, right? That the volume, the users, the money is very scattered. There's a handful of apps like, I use Alpha Friends a decent amount. It's kind of like your friend tech of Degen. You have Degen punks, which are, the sort of copy of what punks were on the Ethereum mainnet. You have a bunch of like meme coin tokens. You have things like Proxy, which is a DEX. But all these things are extremely underutilized, let's just say, right? Because of the fact that the user base, especially the large size users, like ETH whales, people who have a lot of money, I don't think they've made their way over to Degen chain yet. I think they probably will at some point because the opportunity is massive. Like I see no reason why a person should not bridge over to Degen. Like you absolutely should if you're an ETH whale. You absolutely should if you're just a crypto whale, right? Because there's so much social fi related stuff happening, like Alpha Friends. I've talked about Dracula before, right? I've made tons and tons of videos on Dracula. You can too, right? Other people are making a lot of content. Just for watching Dracula, you'll get one of these points, like drips, they call it, but every time you watch a video. So as you constantly, doom scroll, whatever you want to call it, you'll gain a point like this, right? So these points may be useful in the future to redeem as, Degen tokens. Same thing with, like Farther. Farther is another one, which is kind of like, I think it's kind of like a meme coin related to like a point system in the Degen ecosystem, right? So there's all kinds of stuff that's happening on Degen, but I believe the user, the activity, the volume is very scattered. And in fact, it's very, very thin compared to Base, for example, which has, $1.5 billion. A lot of, heavy hitters from Ethereum mainnet who are bigger whales. Degen, not so much. I think it's struggling to get TVL. But I think, again, like it's good that you're early. I've been doing these videos on Degen ecosystem for 2.5 months. Being early sometimes can be good because you can recognize trends and momentum and new apps and products well before the rest of the herd does. And once the herd comes with big money, big users, all you do is just chill, right? All you do is just profit, profit, profit. So with 2.5 million TVL locked, I think this is a little bit more. This is probably closer to like 6 or 8, in my opinion. But, you know, this much kind of TVL with these kind of stats, I personally think Degen is probably due for more upside. It's just it's in its own little struggling momentum, and I think that struggling momentum is coming from broader market, right? Like BTC is struggling a little bit. Um, you know, you can look at other assets too, right? Here's my other watch list. Like, I don't know, let's pick something very popular like Solana. Solana's been struggling down here too. Solana has lost, in my opinion, a lot of users and activity over the last few months because the meme coin craze has calmed down. The meme coin craze has calmed down. Volume has come off, users have come off. I think a lot has pretty much just gone into a sideways mode, right? And even with Solana, I would make the argument with Solana people that we're probably due for another correction. Maybe $100 possibly in Solana. Uh, Not that it's necessary because this could be Solana's base right here, and maybe it just does this and then takes off July, August or something, right? So I'm not gonna sit here and hold my breath for Solana at $100. That's not really necessary. But you know what? If our thesis is correct and BTC does this and this and this and this like that, I would probably say with pretty high confidence Solana is pulling back to 100. Right. I'd also say Degen is quite possibly pulling back to somewhere around these levels, which is like close to 0.01. Hang on, right there. Right. That would be a pretty sharp shakeout. That would be a nasty summer shakeout. From the high to the low, that's an 80% drawdown. Man, I'm backing up the truck. I'm backing up the truck and I'm piling in my money to Degen and I'm piling in my money to Solana. Because the other thing that I've made clear, all right, let me go back to my morning thread here. The other thing I made clear is, yes, alt season has probably already begun. Okay, we're just waiting for who the winners are going to be. We're going to bottom out first and start pushing up higher. But the other thing I made clear is that the goal for me this year is very simple. I want to collect as much Solana and Degen tokens as possible. Every trade, every decision I make is thought in the mind of how do I get more Degen tokens? How do I get more Solana? That's it. That's all I want to do this year. So when you have very simplistic goals like that, it makes your trading and everything easier. You don't have to go long, short, long, short. All you have to do is think about every dollar I earn, I'm going to pile into Sol and Degen because I believe that 3 months, 6 months, 1 year from now, these are going to be valued at a higher price from today, right? Do I believe Solana 6 months or 1 year from now is going to be higher than it is today? Yes. Do I believe Degen is going to be higher than it is today in 3 or 6 months or 1 year? Yes. Then keep it simple. That's it. Okay. So I went through a lot. I know it's a lot. I know I went through things that you guys may not be generally comfortable with, whether it's macro related, technicals, different indicators that I use. But I find looking at the broad market in all different time frames, we didn't even cover the monthly or the 3 month. But if you look at the monthly, right, what does the monthly tell you? The monthly tells me that this right here was a bearish engulfing candle. A bearish engulfing candle like that generally leads to some sort of deeper pullback, okay? And some sort of basing, and then maybe we push higher. Is it necessary that we have to pull back deeper and push higher? Not really, but I think, the way the market looks right now, I think it's probably going to happen. All right, so when you have these kinds of candles, like these are kind of called, I don't know if they're called tweezer tops. They're not really tweezer tops. It's just really a bearish engulfing. All right, so when you have that kind of candle, like, yeah, you got to pause. Like, you got to think, man, like, do I think this is just an up only mode? Or do I believe that there's going to be a multi-month pause, which again goes along with my thesis that if it's a multi-month pause, then I think alt season begins, right? I think we begin our alt season and some parts of crypto pop off, like Solana possibly, or Degen possibly. Maybe it's other stuff, RWAs. RWAs have been a pretty big conversation. RWAs are, real world assets, Ondo or Mantra, Render token, Maple. These are all tokens that are trying to tokenize real estate or bonds or, tokenize GPU processing, tokenize like Hive Mapper, for example, is doing like dash cam stuff. You have like, the Uber, the decentralized Uber. There's all kinds of stuff coming about in the RWA world, right? So the point is, let's see what the summer has in store for us. And if it's alt season, it's game on, right? It's game on. Try to make bank, try to make money. And then again, do not forget the goal. This is my goal. None of this is financial advice, of course. This is just my insight on the market, but this would be my goal. All right. Come join Alpha Friends, by the way, if you want, access to me directly in like a chat. I post all kinds of stuff, my trades, my outlook, my insights, what I'm looking at. If you have any questions, I answer them here. Alpha Friends is also kind of cool because like I'm not really that popular on Alpha Friends, I'll be honest. But the good thing is, if you look at all these people, okay, what happens is when you subscribe to, let's just say Wake or BFG or any of these guys, people are just farming these alpha tokens. Like it has nothing to do with, oh, well, what kind of alpha is this person providing? No one even cares about that. They're just, buying, like, for example, I only have 10 subscribers, right? But if you subscribe, then you start earning alpha because you're farming alpha tokens. And that might be worth something in, 2 weeks or 1 month. Right now, my subscription costs like 1,000 Degen, which is $10 a month, right? Which is pretty decent, for $10 a month, you get direct access to me. And then, of course, you are basically farming alpha tokens. I don't know what they're going to be worth in the future, but they might be worth a lot, right? Could be. So anyway, not financial advice, not necessarily that you have to join Alpha Friends. I'm just telling you that you do have an option if you want to. You've gotten, most of my insight on the market today. I gave you all a rundown of many different time frames on the chart, many different indicators that we use, all kinds of stuff that I generally look at on a day-to-day, week-to-week perspective. I think it's going to be a pretty solid summer, in my opinion. I think we're due for, this kind of pullback anyway. But after that, I mean, June onward, like we might just do this. Like it might be bananas, headed into the end of the year. Okay. So we shall see. All right. Good luck, everybody. Take care. Follow me on Warpcast. The invite link is below. Follow me and join Alpha Friends, my subscription. Again, 10 bucks a month, and you can farm your own, alpha tokens, right? Don't really know what they're going to be worth, but could be pretty cool. All right, Web3 is literally here in front of you on Warpcast. Right? If you want to make money, whether it's Alpha Friends or buying new NFTs like the Degen on-chain punks, or if you want to be a creator and create content on Dracula, this is like your Instagram shorts or reels, YouTube shorts. This is where you can start earning money, right? Content creators can earn money here. Okay. What else? I mean, I posted these charts earlier, right? This is from Glassnode. This is just general data of, when it comes to bull markets and BTC, what is the average drawdown? Well, as you can see, in the Genesis bull market right here, the average drawdown in the bull market was 49%. In the 2011 to 13, the average drawdown was 71%. Sorry, not average, max drawdown. In the 2015 to 2017 bull market. This is kind of when I entered. That was 36%. And then I was heavily involved, 2017 and all the way up to now, pretty much. Max drawdown was 63%, right? Now the max drawdown is 20.3%. So let's just say we averaged all these max drawdowns. We should come up to somewhere around like 35%, 40%. So where does that put us? Where does that put us? From the local high to, let's just say 31, 32%, that's 52K. If we're going super deep, 40%, we're talking about 45K, right? So 52K, 45K, that's the general range that I'm kind of paying attention to. If this data means anything for the current bull market, that is, right? We also talked about, price performance after halving. You'll see that, BTC post halving has pulled back negative 11%, but generally after that, it does pretty damn well. Post halving, like several weeks, several months later, it does pretty well. Ethereum, same kind of thing, post halving, it pulls back a little bit, but then really goes on a pretty insane run. Ethereum generally performs better than BTC post halving, which is probably because, prior to its Bitcoin halving, like, everybody's anticipating it, right? So everybody's going to bid BTC. That's where the money is going. Here now, maybe a lot of the BTC trade is done, but Ethereum, well, Ethereum has a long runway ahead of it. They have a lot of, really cool stuff that they're building, whether it's the Denkun upgrade, L3s like Degen that I've spoken about, reduction in fees, increase in speed, L2s and L3s coming about, Ethereum ETF, of course, BlackRock creating a on-chain fund. So a lot of bullish catalysts for Ethereum. So anyway, with that being said, I'm going to wrap it up. All right, I hope y'all found the analysis useful, went through a lot of timeframes, indicators, all kinds of stuff. Hope you guys enjoy the content. Good luck, everybody. Take care. If you have any other questions, let me know. All right, cheers.